is, say, 1 million. If your annual rent in a year is 1 million, now 20% of 1 million is 200. So that 200,000 is allowed for you to deduct before calculating your personal income tax. Now, in the case of someone that the annual rent is 6 million, what is 20% of 6 million? 20% of 6 million is 1.2. You are not allowed the whole 1.2. You are only allowed the maximum of 500,000 naira. So it means you would allow to deduct that before the balance is now subject to the personal income tax. Now, for the full rate of the tax, like I was saying, the first 800,000 is exempted. So the next 801,000, sorry, 801, how do I put it now? So the next 2 million and 200, and sorry, 2,200,000 is now subject to 15%. Then the next 900,000 after that, 9 million is now subject to 18%. And the next 13 million is subject to 21%. Then we have it like that. Now let me explain better. So, for example, someone with annual income of say 4 million, let's still use the 4 million. What that means is that the first 100,000, 800,000 from that 4 million is not taxable at all. Then we are left with 3.2 million. Out of which this 3.2 million, the 2.2 million will be taxed at 15%. So when you remove 2.2 million from the 3.2 million, we are left with 1 million. Then the last 1 million would now be taxed at 18%. So that is how it works. It's not that the whole difference will be taxed at 15. You will keep deducting it. So if you exhaust the first range, you move to the next range. Let me use another example of 6 million. If the total annual income is 6 million, the first 800,000, 0%. Then the next 2.2 will be charged at 15%. So when you deduct the 2.2 from that, you're left with 3 million. Then the next 3 million, which is now up to 9 million, will now be charged at 18%. And that is how it goes. So if you check on the tax physical tax planning committee, we still have the tax calculator there that would help you calculate what exactly your tax for the year would be if you impute a certain annual income and if you deduct pension, if you deduct any of this contribution, you can fix in the price and you'll be able to see what the tax to be paid at the end of the year. We have that on the website of I think it's the Tax Planning and Fiscal Commission. Yes, we have that there. Now, another important tax, which I believe everyone should know, is the value added tax. I believe we've all heard of value added tax. VAT. Hello?
Yes, we have, but
Yes,
we
we
can.
have. Yes.
Yes, we have.
Yes. Value added tax. People tell me, am I supposed to charge VAT? Am I supposed to pay VAT? What am I getting that I'm paying VAT on? What is the service I'm deriving that I'm paying VAT on? We have all of these questions.
Yes, we can hear you.
Now,
You can go ahead, but we can hear you.
okay. All right. So value added tax is a consumption tax that is levied on goods and services. Consumption tax. It is when you consume those goods or you patronize for the service that you would be charged value added tax. So the Nigerian Tax Act makes provision. This provision, the rate is not changing. The rate did not change rather. So currently it's 7.5, and even from January 2026, based on what we've seen in the act, it's still 7.5. So 7.5 of your of whatever it is you're buying is is the VAT on it, and this is how the VAT works. So, say for example, I'm a consultant now. Um, I'm providing accounting service to Mr. Victor, in which my services, my fee, my service charge, and everything is 1 million. Now, according to the law, I am supposed to charge VAT. I am just an agent that is supposed to charge VAT, collect it on behalf of the federal government, and to remit this back. So it's not my money. My service charge, my professional fee is 1 million. But when I'm sending an invoice to Mr. Victor, I would state it there, professional fee 1 million, subject to VAT of 7.5%, and the total invoice would read 1 million, 1,075,000, in which I would get my 1 million. But in this case, Mr. Victor is supposed to also deduct withholding tax. But I would be getting the 7.75,000, which is the VAT. Now, when I get my 75,000, it's not my money. I am only an agent. I'm supposed to remit this 75,000 to the federal government. And like as I said, it's an offense to not deduct if you have been obligated to deduct, and it's also an offense for you to deduct and not remit, because that means you're holding on to the money that's not yours. So also with the value added tax, they've also been some changes in terms of who are those that are obligated to charge back. Now, for small companies with turnover less than 50 million, they are now exempted from charging VAT. So it means if your annual turnover, please, if your annual turnover is less than 50 million, you are exempted. But medium and large companies that is above the 50 million turnover threshold, you must be, and you provide services that is vatable, that is are subject to VAT, you should charge VAT and deduct, and you must remit, because non-remittance is misappropriation. It's also a crime. It's an offense. You would We would go through the penalties and the fines and everything for not filing, for not deducting. We would see that as we continue. Now, some products, some services, some goods and services are exempted, and some are subject to 0% for VAT. So one of those zero rated goods and services is basic food items. Basic food items I would buy in the open market is not subject to VAT. Then we have medical and pharmaceutical products. They are not subject to VAT. Education and books and tuition fee, they are not subject to VAT. Housing for residential rent, not commercial, residential rent is not subject to that. So we have a full list of all of those too from on the schedule. Now, what are the obligations of taxpayers? I believe another essence of this webinar is to make you understand, just to put your mind at rest, that make you understand the tax law better, and so you would be able to avoid making some mistakes. Now, the first thing you need to do is to make sure you're registered with the tax authority as a business owner, or if you work for a company, make sure the company is registered with the necessary tax authority. In For the case of VAT, VAT is the FIRS for now. The FIRS, Federal Land Revenue, is the tax authority in charge of VAT. And if it comes to withholding tax, depending on the state in which the state tax authority of the person you're dealing with. So make sure you're registered with the appropriate tax authority, and filing returns. You need to make sure you file your return timely and accurately. Accurately in terms of, if you are filing the wrong return, you're not remitting the full amount, because we also have people who do that. Say in the case of pay, the total pay deducted for the year is 1 million, you're remitting 800,000. That's an offense. You would be penalized for it. And you would also pay back the difference with interest and fines on it. So how about you avoid that? Because most times we do it just to save cost at a particular time. But like it's just like being penny wise and pounds foolish. You would pay more when the time comes. So it's better you just make sure you get everything sorted. You file your return timely and accurately to avoid interest and penalty. Because this interest and penalty would also cover the amount you should have paid and interest on it, and make tax on or before the due date. Some of these taxes have deadline. One of them is VAT. When you charge VAT and you get VAT, you should file on or before 21st of the next month. So it means if I had transaction for the month of September now, and I'm paid the money, so I should file on or before 21st of October. When I don't do that, I'm guilty in that area, and I will be charged fines and penalty when I do pay. Because one thing, as you would have access to your tax format, that is the portal. Is a portal in which you use to interact with the FIRS. Is the portal that is where you would file, you would provide information of the transactions that happen, the cost, the amount, the date of the transaction. So the date of the transaction is also stated there, and that is how you would even pay for this tax. So you need to pay the right amount on or before the due date. Now, another thing is maintaining of records. I know most business owners are very, very guilty of this. Keeping accurate record. This is where accounting comes to play. You might be wondering, how do I even know my total sales for the month for me to be able to determine what the VAT I'm supposed to pay? The one way you would know is where if you have kept record as the transactions occur, you would be able to know the total amount that is subject to VAT and the VAT you've received and the amount you need to pay. But if you don't have records, if you don't keep record, that is when your account is scattered, your books are scattered, and you would not even be able to meet up with the deadline. So one advice, even as um, owners, business owners, is to keep proper record. Not just because, even for your own decision making, keeping accounting record. You know, accounting is key in running a business. Accounting is very key. It helps you see what you've done in the past, mistakes you've made in the past, and how you can avoid them and plan for the future. Planning for the future. Another thing is tax planning. One of the essence of this webinar is to make you understand your tax obligation and help you plan ahead of time, plan ahead of 2026 to know what are the measures you need to put into place to be able to make best use of that opportunity so you don't fall into the case of I'm not aware, oh, now I need to start paying fine, I need to start paying penalties for it. Another thing you need to take note is cooperation with tax authority. I know most business owners, whenever it is the CFIRS, they are all locked up. It's like I don't even want to hear anything from them. I don't want to use it's just like when some of us see police, we feel like I don't even want to have anything to do with them. But it's not like that. When you're not guilty, they won't hold you responsible for anything. So when time comes, you provide necessary information, provide all the required information. And how would you provide information? That is when you've been keeping records. That is when you have all your books intact. Because when you don't have them intact, of course, when they start asking questions, it's going to be a case of So to avoid that, maintain proper records and cooperate with them. Cooperate with them by providing all the necessary documentation. When they ask for this, you provide it and don't shy away from them. I mean, it's tax is law. Tax is law. When you don't break the law, they would not hold you responsible for anything. Okay? Now, the deadlines and penalties. Like I said, it's fair it as the company income tax. It needs to be filed. What do you need to file? Your annual return. That is your audited financial statement. It is what you need to file. And the deadline for filing is 6 months after the accounting year end. Most businesses, the accounting year end is 31st December. So what that means is that by 30th of June the next year, you should have filed your annual return. You should have filed your CIT. And that is when you would know whether you fall under the threshold of the small company or the big company, whether you're going to be paying tax or not. But you should file. And you'll see that you'll file it on tax format. FIRS Tax Remax is your portal in which you use in communicating or filing your returns with FIRs. Now, what is the penalty? Before now, the penalty for not filing is the first month you'll be charged 25,000, an additional 5,000 every month. But now it has changed. If you don't file the first month, meaning after June 30th, in July, you'll be charged 100,000 naira. And for subsequent months, you would now be charged 50,000 monthly. You know what that means? Imagine when you're not supposed to pay any tax at all, but they just needed you to file and you refuse to file. It means the first month, 100,000 is gone already. You will have 100,000 to pay. Then the next month, 50,000 on top of the 100,000, and so like so. And if you have CIT to pay, this 100,000 and the subsequent 50,000 is different from the tax you're supposed to pay. The tax you're supposed to pay is still subject to interest at the prevailing interest rate. So that is why you need to take your filing very serious. Another one is the withholding tax. Like I said, if you don't deduct, that's 40% of the amount not deducted. And if you deduct and you refuse to pay, there will be interest. You would be paying the amount you should have paid and also interest on it. All of that are covered in some sections in the Finance and the Nigerian Tax Act. Also for the VAT you should pay. You're supposed to file before 25th of the following month, and if you don't pay, there is a 50,000 for the first month and 25,000 for the subsequent month. Now for the personal income tax, which is a self-assessment as individuals now. Say at the end of the year, I want to file my personal income tax. There is no, according to the new tax act, there is no statutory deadline for filing your return for that. But for payee, since the employer now are the one deducting payee, they should deduct and remit and file the return on or before 31st of January the next year. So it means all of the payee deducted for 2025 should be filed on or before 31st January 2026. Okay? All right. So that is it for some of we have other penalties and fines. So I'm just bringing out the most important ones that as it pertains to business owners and running of the business. Okay. Now, since taxpayers need to note, there are some, I know, have any one of us received letters from tax authorities like FIRS, you receive assessment letters and all of that, that you're supposed to pay this and you're supposed to pay that. Do we have case of anyone here?
Yes, I've seen a
Hello?
case like that before now.
Yes.
Oh,
Okay, so
yes.
FIRs have always written to your company.
Yes.
Okay. Mm-hmm.
Yes,
So
definitely, man.
I know of people that whenever it is they receive letter from FIRS, they start panicking. Some of us see FIRs as, you see them like police officers. Some people, they just don't want to hear anything about it. But like I said, if you are compliant, there is nothing to be afraid of. And the provision, so the Nigerian Tax Act is not just coming here to tell you pay this, pay this, pay this. They also cover your interest in terms of how you're supposed to um make this how do I say it? Make your obligations known, like how you're supposed to file your return and when they write to you, how you're supposed to respond or when the deadline, the time frame for you to respond and all of that. So if have anyone of us received letter that it's about maybe you filed a return and now they're writing to you and say you should come and pay more. Have you ever received
Yes.
such?
Yes.
Yes. Okay. So now this is you've done your self-assessment. When you file your return, that is self-assessment. You are declaring and saying, okay, this is my turnover for the year, this is my profit, and this is my CIT, whether if you're paying CIT, and this is if you're not, you just file your return. Then the FIRS will review, they'll do the deck review and come back and tell you, okay, based on what you filed, we believe there's just the arithmetics and all of that and tell you there is more to file. Now, one thing you should know is number one, do not panic. It's just you responding. If you have your documentation correct and you are sure that you've done and filed the correct thing, it's all about communicating with them. But there is the time frame for that, which some of us don't know. You may object any assessment within 30 days. So it means when they write to you with the new tax act and Nigerian Tax Administrative Act, you may respond within 30 days. But when you don't respond, it means whatever it is they've written to you is final because they take silence as acceptance. Say they write to you additional assessment for you did file, but they say, okay, you should have paid more. You didn't declare all of your profits. Some of these costs, they are not going to allow it. And say you do not now respond after 30 days. Now the law is giving them right to now start enforcing this new assessment that they've written to you. That is for additional assessment. But when you do respond within 30 days, and I would advise when you're responding, you consult your tax consultant because they would know better how to respond to them in terms of even looking at your account. So that is one another reason why you need to make use of a very good tax consultant because they would, it's law. Most times the lawyer knows how to defend you best. So now they would write and they would be able to have that communication on your behalf and let you know and guide you through the process. But you just receiving their letter, some people don't even take them serious. And after 30 days, you still did not respond to them. Now the law is telling you if you don't respond, silence means acceptance. So it means whatever assessment they've given to you, even if it is 100 million, it's become final and you are going to pay it. So that is why when you receive any assessment, now there are two different type of assessment. Is either the administrative assessment. Administrative assessment is when you've not even filed anything at all. It's like a best of judgment. The FIRS or the tax authority is saying, okay, you did not file for the year 2024, and we believe based on the industry you're working and everything, or we believe your tax should be 10 million. When you get that, okay, why haven't you even filed in the first place? But maybe for some reason you did not file. The next thing is for you to either write to them and explain and get your tax consultant and get everyone ready. You need to file first to even know what it should be. It's possible if you prepare the whole account, it's possible you're not even going to pay any money, maybe except from the fines and penalty. Maybe you're not even supposed to pay any charity. So that is why you need to have tax consultant that sees into your business and guides you. Tax planning is very, very important. You don't plan for fines and penalties. You plan to avoid them. So you need to take note of this as a taxpayer to avoid all of this. Now, another thing with another provision that it's now made available with the new tax act, the Nigerian tax act, is joint audit. Joint audit. What I mean by that is, we have the Federal Inland Revenue and we have State Inland Revenue Service. State Inland Revenue could want to audit you, maybe for your payee to know whether you've been remitting payee. And in the process, they see whether they are seeing something like you've not paid your income tax. Now the provision is now there that there could be a joint audit between the state inland revenue and the federal inland revenue. In this case, in 2025, in 2026, that will be the NRS. So it means they could invite themselves to say, okay, we are in the process of auditing this business and we're seeing some discrepancy that affects you. Come, let's audit together. So it's not a case of it's not your business because I've seen scenarios where company is being audited by FIRS and you didn't pay the payee and maybe they're asking evidence of filing pay and tell them we've paid for them. FIRS could actually write to the state inland revenue to confirm now. So that is a joint audit. So it means they want you to be compliant every sense of the way, as in every way possible, both in with the state inland revenue to the federal inland revenue, everything. Okay. Now another thing is interrelated passive transactions, or as we have it in the new this thing, artificial transaction. This has to do with sister companies. We have sole proprietor that be owners of business that have multiple companies. When they borrow money from one place to another, all of that, two companies we quickly need to make this payment for company A. Company A will transfer money to company B. You call it loan, but you know that loan is never coming back because he's a guy that owns both of them. Now, the tax authority would now take this company as separate individuals. They won't see it the way you see it as, oh, it's the same person that owns it. They'll treat it as separate individuals. And this happens in terms of loan, services, and all of that. They will take it as arm's length and treat it as separate individual. So it means you should also take note of this so that whenever it is you have this kind of transaction where maybe you're not receiving cash for the payments and everything, you need to take note because you would be taxed for it. If you're claiming it's you're selling to a sister company, make sure you follow up. If withholding tax is liable, you deduct withholding tax. Is VAT is if it is VATable, you need to deduct VAT because they will take them as individual parties and you are supposed to pay the necessary tax on them. Okay, so about rounding up, the other one is the key consideration. We talked about that. Seek professional advice. I would always say your tax profession and your tax consultant, your accountant, they are like your doctor. You don't lie to your doctor. So if you lie to them, how would they be able to provide you the right prescription? How would they be able to provide you the right prescription? So I've seen business owners that they tend to do things on their own. You have an accountant, but you still don't tell the accountant what you spent money for. Company's money. The accountant is responsible for keeping records for the company, and you incur expenses, and you don't even tell the accountant. He's asking you, sir, what is this money meant for? He's asking so that I would know how to record it, proper recording. So you need to be transparent with your accountant and even your tax consultant so they can help you, they will advise you accordingly. Now, another thing is tax planning. You plan ahead. You optimize all the appropriate tax laws so that you would be able to avoid unnecessary, or should I say avoidable penalties, which is like what you're doing now. You're part of this webinar because you want to understand the law so that you'll be able to make necessary decisions. If you're not here now and it comes 2026 and you're not aware of some laws and everything, of course you will pay the consequences for it. So you need to plan ahead of time. You really need to plan ahead of time and maintain accurate record. Maintain records. Third-party documents are important, especially when it comes to tax audits. Third-party documents are very, very important. Keep them. You might think it's just give it to me. By the time you will need to claim some deductions and they're telling you provide third-party documents, that is when you will know. And I forgot to mention, according to the new tax act now, the Nigerian tax act now, regarding VAT, say, for example, you incurred some expenses for the business and they should have been subject to VAT, but you did not pay the VAT on it. Now, what the law is saying is that they will not allow you to make those deductions. They will not allow you to deduct them as normal company expenses that you would have deducted. Same thing for um fixed assets. So you bought okay, say for example, you bought a vehicle for the company. Normally, that is an asset that you'll be able to claim capital allowance on. But if you don't deduct VAT on it, they will not allow you to claim capital allowance on it. That is their way of making you pay VAT. Because if you don't pay VAT, you will not be able to claim the expenses. You will not be able to claim the expense. So know this so that you plan ahead. So if someone is telling you, oh God, I'm not paying VAT, don't give me VAT, don't give me VAT. Take note. It will affect you when you want to claim your deductions. Okay? All right. Okay, I've talked about the practical tools too of managing your tax obligations. It's about seeking professional advice, planning accurately, and staying updated. Okay, so I think I've come to the end of this. One good takeaway from this is keeping good record, please. It is very, very, very important. Keeping good record and planning. Good planning would not just save you. It will buy you peace of mind. It will buy you peace of mind. You are not running out and scared that tax authorities calling you today. Some of them, oh, FIRS is in our office. You are scared already. Why are you scared? Because you know you're not keeping records. So you really need to take note of all of this. All right. So thank you very much for your time. I believe we'll be answering questions at the end of all the sections, right? Mr. Victor?
Yeah, thank you. Thank you very much.
Okay.
At this point, there are some questions already asked from participants, and maybe I'll just take some of them. Or Mr. Taimba, are you ready?
Yes, I'm ready. I'm here.
Okay, so let's Mr. Taimba take his own session, then you can just take everything together once and for all the questions together once and for all.
Okay, that's fine.
All right, thank you, Mr. Victor. Joy, thank you so much for that wonderful session. It was actually very, very insightful, and I myself, I was behind there listening and learning.
I was taking note actually also, you know.
I was also learning, learning is continuous and no man is an island of knowledge. So of course, we get to learn from ourselves. So good afternoon, everybody. How you doing? Can you unmute your mic and tell me how you doing? Hope we got value from the previous session.
Yes, good
Wow,
afternoon.
very wonderful.
Yes, we
Yes,
did.
good
It was a nice
afternoon.
session. I enjoyed it.
Yes, we did. Good
Great
afternoon.
value with that. Very insightful. Well done, Joy.
Right, all right, that's great. So we are still going to what we're going to be doing is just be advancing the conversation we just had with Joy. We're just advancing the conversation we just had with Joy, looking at some little areas she may not pay attention to, or we need to pay attention to as all right, it's okay. We can mute our mic now so that we don't interrupt.
Let's mute our mic, please. And Mr. Taimba, your video is not on. Do you want to share your screen?
Oh, yeah. Let me share my screen now.
Okay, thank you.
All right, so we're going to still be understanding key areas of the new Nigerian tax, and like my colleague Joy just explained, it was actually her explanation was very exhaustive, but then we need to just look at areas that we need to pay very keen attention to. So we are going straight into the class. Please pay attention. If you are writing before, still turn the other side of your book so that you write more, because there's more information to be put out there. When it comes to the Nigerian Tax Act, it is actually quite complex. It's very, very complex, and we need to understand those key areas so that we will not be at the other side of the law. Because, of course, I believe most of us here are lawyers. I will know that ignorance is not a defense in law. Is it in the court or in the law? We need to understand whether we know or we don't know. If we default, we are going to pay the penalties. That's how the tax law is structured, or the law generally. So in this further session we're having, I'm calling it further session because my colleague Joy has actually done justice. So in this further session we're having, I'm going to be explaining VAT obligations. You know, there is VAT and there are obligations around VAT. I'm going to be explaining VAT obligation for small companies under the NTAA, which is the Nigerian Tax Administration Act. You know, there is Nigerian Tax and there's Nigerian Tax Administration Act, and then there's Joint Revenue Board Act, and then there is Nigerian Revenue Service Act. Those are the four acts that were signed into law recently by the President of the Federal Republic of Nigeria. So we're going to be looking at it under the NTAA, which is the Nigerian Tax Administration Act, and then we're going to identify when a company is exempt. So we're also going to identify the new threshold for the new threshold rule for WHT, which is withholding tax. We're going to describe the rule that imposes double WHT rates on companies and understand its compliance implication. We're still going to understand how the new Nigerian Tax Act treats personal income tax based on residency rule and identify how earnings are taxed in Nigeria. Of course, Joy was elaborate with personal income tax, but then we're still going to have some conversations around it. So I want to know people that were listening to the class. So if you are listening to the class, based on the new Nigerian Tax Act, who is a small company? Or at what level do we say this company is a small company? Anybody? Let me hear you speak. My classes are always...
If your turnover is 50 million or less.
Less than 50 million, yeah.
turnover is 50 million
No,
or
less
less.
than 30 million.
Okay. Any other person, turnover 50 million or less?
An asset below 250 million.
Assets less than 25 million.
Okay. So I want to ask again, based on the new Nigerian Tax Administration Act, who is a small business?
Someone that his income is 51 million and above.
The income is what?
51 million.
I think it's if it's 25 million and below.
Okay, let me.
50 million and less.
I think under the new
The
Nigerian
new one
tax,
is 50 million and below.
a small company that has turnover less than 50 million and also fixed asset less than 250 million.
Okay, let me have more answers.
I think
Hello, can I talk?
Can you
Please
hear
go
me?
ahead.
Can I talk, sir?
Yes, please go ahead.
Hello?
Okay, my name is Aki Akinlele. Okay, the answer for the company as far as the law is concerned, the new law is concerned, if the turnover is no more than 50 million naira and the net current assets is also no more than 250 million naira, such companies are regarded as small companies.
Okay.
Thank you.
That's good. You know, I said, well, I've actually said two things here. The first one I said, that's what is displaying on the screen. Based on the new Nigerian tax as who is a small company, people said 50 million and below, and then asset base. Hello, can you hear me?
We can hear you.
We can hear you now.
Okay,
You were muted.
we lost you there.
Okay, I said two things. The first one is what I asked here. Based on the new Nigerian tax, who is a small company, which most of us said 50 million and below, asset base 250 million and below. Then I asked again, based on the new Nigerian Tax Administration Act, who is a small business, not company again, business. So that's where we are now. So let me get your answers. But then let me make us understand something. In my sessions like this, there is no absolutely correct answer and there is no wrong answer. Why is there no absolutely correct answer? Because there's room for improvement. And why is there no wrong answer? Because no man is an island of knowledge. So feel free, let's have the conversation. So based on the Nigerian Tax Administration Act, who is a small business?
Hello, good afternoon.
Good afternoon, sir.
My name is Ayodeji.
Yes.
According to the Nigerian Administration Tax Act, a small business is a company which the turnover is 100 million or less, and or less. Thank you, sir.
Okay, Ayodeji. Okay, that's fine. Thank you so much. Another person before we proceed.
Nigerian.
Okay. I know some people are really getting confused, but don't be confused. I'll walk you through. Mr. Abdullahi Abdul Karim, I can see your hand up.
Yes, good afternoon.
Good
everyone.
afternoon. Good afternoon.
Yes. From my own perspective, I think the new tax act, the new Nigeria Tax Act, stipulated that for a small company, the turnover must be 50 million threshold and with asset less than 250 million. But the Nigerian Tax Act Administrative Act stipulated that a small business must be with a turnover of 100 million threshold and less than 250 million assets.
Yay, Mr. Abdul Karim Abdullahi, thank you so much for that. So Ayodeji just spoke, Mr. Abdul Karim Abdullahi just spoke. Any last person before proceed? Any last person? Doctors, do you want to say something? Okay,
afternoon. Can you hear me?
Can hear you, Dorcas. Good afternoon.
All right. Okay. So, my perspective about this is for a small company is a company with a gross turnover of less than 25 million and asset base of less than 250 million. Thank you.
Dorcas, thank you for your opinion. Okay, let's see what the slide is saying. Aha, the new Nigerian tax has clarification for small company. You know, recently in June 26, the president signed into law the Nigerian tax act. Then we're waiting for the gazette. The first gazette was released, which was the Nigerian Tax Act, which on page 126 of the Nigerian Tax Act is stipulated that a small company is a company that has a turnover of 50 million or less, plus asset base of 250 million or less, excluding companies that offer professional services. Have you gotten that now? Have you gotten that? Confirm if that is okay. Let me come again.
Yes.
Come again, please.
A small company is a company, according to the Nigerian Tax Act, on page 126. A small company is a company, that's the gazetted copy on page 126. A small company is a company that has a turnover of 50 million or less as presented on the slide, as you can see it on the slide, plus 250 million naira or less in asset base, but excluding companies professional that offer professional service. That means once you offer professional service, you are into consultancy, Legalify.
Oh, yes.
Legalify, you are no longer a small company, you are no longer a big, you are a big company, even though you just make just 10 million. Cruise-wise consulting, Cruise-wise academy, even though we make 10 million or less, we are not a small company because the law has exempted companies that offer professional services in the category of companies. So everybody got it, but the only thing is we're excluding that provision that it does not include companies in professional service. Does that make sense? Does that make sense?
Yes, sir.
Yes, it does.
Moving forward. Tony, mute yourself. Thank you. All right. While my class, I always want my class to be very engaging. So when you talk, you unmute yourself, talk, and then mute yourself back so that we can maintain decorum. Thank you so much. So moving on. This is a small company based on NTA. It's not Nigerian Television Authority, Nigerian Tax Act. Let's take it down. NTA, Nigerian Tax Act. So moving forward, so after we have already settled down, after we tax consultants, taxpayers, and the Nigerian citizens have settled down to understand that, okay, now by next year, January, when I make 50 million or less, I'm a small company, then 250 million asset base, I'm a small company. Everybody was okay with it. After we have murmured and complained that I thought before they signed this act, people say 100 million, blah, blah, blah. Everybody argued and settled down. Then boom, government released the Nigerian Tax Administration Act, NTAA. Government now released NTAA, Nigerian Tax Administration Act. So the Nigerian Tax Administration Act said, if you are a small business, so the Nigerian Tax Administration Act now focused on small business, not small company. Am I making sense now? And then when they talk about small business now includes business name. That's people registered as enterprise. Am I making sense? When we talk of small, good. When they talk of small, when the NTAA captures small businesses, that means it includes enterprise because an enterprise is also a business. But in the NTA, it expressly said small company. So small company has to do with limited liability companies. But the NTA says small business. And the irony of it is this NTA said for small business, the for a small business, for a business to be seen as a small business, you have a turnover of 100 million or less. But then the NTAA still maintain the 250 asset base. But then the NTA explanation was based on VAT, which is value added tax. Because, you know, like my colleague Joy explained earlier, small companies are not mandated to deduct and file VAT. The only thing is, if you deduct, you must file. But if you don't deduct, it's fine. You are not mandated to do so if you are a small company, a small business. So the NTAA was emphasizing on VAT. It did not mention company income tax. From our interpretation as tax consultants, the NTAA is focusing on value added tax. So you should deduct and remit value added tax only if your threshold have exceeded 100 million. So this is the explanation currently on ground until there's a further clarification, official clarification. But the explanation on ground now is the NTAA is focusing on small businesses VAT remittance. So if your business have not done above 100 million, you are not mandated to deduct, charge, and file VAT. But if you charge, of course, you must remit. Am I making sense? Does this clarification make sense? Can we proceed? Can we move forward?
Yes, you can move on, sir.
All right. Does this clarification make sense?
No, it doesn't. Please, can you shed more light?
Yeah, you can go
No,
ahead.
it doesn't, please.
It doesn't? Okay, let me come
Yes.
again. But do you understand the NTA? That's the first part. The first part in yellow. Do you understand the first part in yellow? That's the yellow on the slide, the one on the left. That's NTA.
No, please. For me, no, please.
Aha. Okay, let's go again. When we say NTA, there are 4 bills, 4 acts were signed into. Can you hear me? 4 acts were signed into law: the Nigerian Tax Act, the Nigerian Tax Administration Act, the Nigerian Revenue Service Act, and the Joint Tax Board Act. So the first 2, which have to do with tax administration, is the Nigerian Tax. Am I making sense? The first one that was released and gazetted was the Nigerian Tax Act. And the Nigerian Tax Act said to operate as a small company. Anytime they mention company, no, it's limited liability company, a company that has directors and shareholders. But it's not every business that is a company. There are some businesses that are registered as business name. Am I making sense? There are businesses that are registered as business name. Those ones do not fall into the category of the first explanation on the left in yellow, which is the NTA. The NTA does not regard business name. So if you are a business name and you are making 20 million, 30 million, you are, according to the first act, which is the NTA for small company, if you are a business name, you are making any amount, you are supposed to still file tax and pay tax, not just file and pay tax. So if you are a small company, when they say small company, they are referring to limited liability company. That's the NTA. You should have a turnover of 50 million or less. So an asset base of 250 million or less. Then you qualify as a small.
Mr. Timber, I think the issue here is the difference between a business and a company. You understand? Okay. I think they are not actually getting it, because most people see business as company. Yeah. When you're a business, they believe you're automatically a company. But there's a difference. If you register as a business name, you are definitely not a company. As a matter of fact, if you register as a business name, although you are operating as a business name, you don't have you cannot get a what's the name? You cannot get property in the name of your company. The law sees you as if you, as an individual, you are the one, operating the business. That's the way the law sees you. So please just throw a little bit of clarification.
Okay. So that's it basically. So one for the first NTA referred to a company, which is a limited liability company, and then the NTAA referred to the umbrella body. Either you are a business name, you're a company, whatever business you are running, it's the NTAA elaborated to include both business name and company. But then their elaboration, their presentation did not capture company income tax. They were presenting a threshold for filing value-added tax. So the NTAA threshold focused on value-added tax, not company income tax. And then the NTA focused on company income tax for limited liability company. I believe that makes sense. Can we move forward now?
Yes, please. Let's move forward.
All right, so let's see what the slide is saying in the next slide. So talking about VAT, when we spoke about VAT in the NTAA, let's proceed with VAT. There are different obligations, like my colleague earlier mentioned about filing VAT as a small company and all. But then there are two, apart from your obligation to file VAT as a company that receives VAT from, let's take for instance, you are a company offering services. Let's take for instance, Legalify have issued a client an invoice of 10 million naira, and then they decide to charge back on their services of 7.5 and give the client paid the fee and the VAT to them, and then they file the VAT to the FIRS. That is the normal way everybody knows that VAT is done. But then there are other two VAT obligations. Apart from that obligation to receive and file, there are other two VAT obligations I want us to pay attention to here today. The first one is obligation to withhold VAT. There are some companies and some sectors that have an obligation to withhold VAT. That is, if you have a service, like for instance, Legalify, for instance, want to offer legal services to the government or a ministry in the government. If the government wants to pay Legalify 10 million naira, the government will deduct 7.5% VAT from that 10 million naira as withholding VAT. Am I making sense? As withholding VAT. And then there are special companies that have been assigned by the government to withhold VAT. Not every company has the capacity to withhold VAT, except specifically appointed by the FIRS if they are not in the schedule of companies that are supposed to withhold VAT. And these companies that have the capacity to withhold VAT are one, MDAs, Ministry, Department, and agencies of the government, oil and gas companies, money deposit banks, that's commercial banks, then telecommunication. But even in the telecommunication, not all telecommunications, just MTN and Airtel. Am I making sense? And then I think that's the category: oil and gas companies, money deposit banks, MTN and Airtel, and MDAs, ministry, departments, and agencies of the government. Those they have the obligation to withhold VAT. So in case of next time your company or someone you know have a job with to do with the government, and then you see withholding tax and withholding VAT, you should not complain, because the government has the right to withhold VAT from the money they are to pay you for a service and file on your behalf to the government. That's the first obligation. Does that make sense?
Let's go in at 210.
Does that make sense? Can I proceed?
Yeah, it does.
Okay. The second obligation is obligation to self-account for VAT. The self-account for VAT looks like withholding VAT, but it's not. It works like withholding VAT, but it's not expressly withholding VAT. The self-account for VAT is, for instance, let's take for instance, Legalify services have a legal representation with a company abroad. They have a legal representation with a company abroad, and then we're in Nigeria, we're supposed to offer the service to a company abroad, and the company is to pay us 10 million naira. The company doesn't have VAT registration. The company may not want to pay us VAT, and they don't have VAT registration in Nigeria. So the law is saying Legalify services are supposed to self-account for VAT. When the company pays us the 10 million naira, we'll now self-account for VAT. From that money, we'll pay VAT to the government for that services we're offering to that company abroad. Does that make sense? So it's left for we Legalify services to decide and say, okay, we'll include the VAT in the fee we're charging them, so that when they pay, we can self-account for VAT. Am I making sense? Does that make sense?
Yes.
All right. So those are the two VAT obligations. Apart from the normal VAT obligation, we know that we're supposed to charge and file. There are other two VAT obligations, which is obligation to withhold VAT and obligation to self-account for VAT. So moving on, let's look at the obligation to withhold VAT. Someone that is touched with the spirit of reading, can you just help us read what you can see on the slide? Anybody? You can just tell us your name and where you are joining us from, then you proceed and read. Anybody? I like the class to be engaging.
Good afternoon, everyone.
Good afternoon.
I am Odewale Oyindamola.
Have you? Let's hear you.
A registered land surveyor. Can I go ahead?
Please proceed.
Section 13, subsection 1 and 2 of the VAT Act requires all ministries, bodies, or other agency of government, FPAs, companies operating in the oil and gas sector, TN, Airtel, and all money deposit banks to withhold, collect, and remit VAT due on all payments made to contractors. The designated collection agents are required to 1. Prepare a separate schedule showing the name, tax identification number, TIN, address of the vendor, contractor, or supplier, gross amount of the invoice, VAT charged on the supply, and the month of return. Number 2, deduct or withhold the VAT stated on the supplier's invoice. Remit the amount withheld directly to the service in the currency of transaction, separately from VAT collected on sales made by the taxpayer. And 4, file the return of VAT withheld using the relevant module provided on the FIRS Tax Pro Max TPM platform.
All right. Thank you so much, Surveyor Oidamola. Thank you.
You're welcome.
All right. So this is what the law is saying when it comes to withholding VAT. You see, that's why most of us, banks, use charge us VAT very well, but then we may not understand. So the law is saying that banks have the right to do withholding VAT. MDAs, that's government ministry, department, agencies, have the right. They're telecommunication, but not all. Only MTN and Airtel have the right to withhold VAT. So instead of them to pay you your money with VAT, they rather withhold before they pay to you. So the law is saying if anybody falls into this category, that falls into this category, is supposed to remit that VAT separate from the VAT they charge when they are charging for their services and people pay to them. You understand? So that's the obligation on withholding VAT. So moving on, another person that is touched with the spirit of reading, can you help us with the obligation to self-account for VAT? Anybody, please?
Yeah, good afternoon. My name is Dorcas. Obligation to self-account for VAT. I don't know if you can hear me.
I can hear you loud and clear, Dorcas. Please proceed.
All right. Section 14, subsection 3 and 4 of the VAT Act introduced a self-account provision for all supplies for which VAT was not charged. The self-account provision imposed a duty to withhold and remit VAT on a taxable person to whom a supply is made in Nigeria, where 1, the supplier is a person exempt from charging VAT under the Act. 2, the supplier failed to charge VAT. 3, the supplier is a foreign company that makes taxable supply of goods or services without a fixed base or permanent establishments in Nigeria, whether or not VAT is included in the invoice.
All right. Thank you so much, Dorcas. So my distinguished tax colleagues, can anybody just explain what this one means here? The one here. In this first point, the supplier is a person exempt from charging VAT under the Act. Anybody? Just one person before we proceed.
I think my name is Ayodeji. I think the first one will affect the small business.
Good. Thank you, Mr. Ayodeji. That's just the point. So if you have a transaction with anybody that is a small business, has a small business, the law is saying there's a possibility that they will hijack you for self-charge for you to self-charge VAT, self-account for VAT. So normally a small business is not supposed to charge VAT. So if you run a service with a small business and a small business does not charge you VAT because it feels that, okay, I don't qualify, so I don't want to bother myself to charge VAT. So the law is saying there are some transactions, in some way, there's a possibility that they will hold you to self-account for VAT because that small business did not charge it. So that's what section 14, subsection 3 and 4 of the VAT Act is saying. Can we move on?
Sorry, can I ask a question?
Please ask.
Mr. Temba. Yeah, so I want to take us back to section 13.
Okay.
Sub 1 and 2. Yes. So, while you were talking about this one, I was also looking at the document, and there's no express mention of MTN and Airtel. But so it now occurred to me that, I mean, by way of interpretation, subject to your superior knowledge, I felt like if it says MTN, Airtel, and other money deposit banks, could it be referring to MTN and Airtel as a payment service bank, not necessarily as a telecommunication company?
Okay, that's actually a bright one. But then from the circular, when they first issued the obligation to withhold VAT, MTN and Airtel were not included. MTN, Airtel, and money deposit banks were not included. It was later on they were included on the schedule of companies that can withhold VAT. And then when they say MTN and Airtel, there was no specification to narrow it down to their Momo agent or what's that Easy Cash, what's that Airtel's own again? All those their banks, their sub banks they have under there, it was not narrowed to them. They said MTN and Airtel. And in context of the law, we're interpreting it that MTN service, total MTN services, because they did not narrow it down to a particular area of MTN or Airtel services.
Okay, so let me add again. So my argument, the reason why I'm making the argument is this: that under interpretation of statutes, right? There's an interpretation called jus dem generi, which means of the same kind. So if an act mentions something and what follows, it means that what comes before everything that follows should naturally be related to all that follows. So if it says, and money deposit banks, so what it means is that it should be referring to people that engage in the business of money deposit. MTN and Airtel ordinary course of business is not money deposit, but they have another kind of business that allows them deposit money, which is the payment service. So that's why I took that argument. But again, it was just my thinking.
Let me just come in here. There are two things that happened here. So first of all, it is a given at this point that MTN and Airtel's what's the name? Money deposit banks, they are Momo and all these things, they apply here. So I believe that before January 2026, I believe there will be clarification, because the particular what's the name issued by FIRS has been causing issues. This particular issue you raised, a lot of persons have raised it too. So we believe that before January, there will be specific clarification. But we can go away with the fact that MTN, Momo, and its Airtel counterpart is applicable in this particular instance. But whether or not it applies to the general MTN company and general Airtel company, it will definitely be clarified before January 2026.
All right, thank you so much, Mr. Victor. Let's look at, we have done with the obligations of VAT, so let's look at the updating withholding tax regulation. In 2024, there was an update, there was a withholding tax regulation that was issued by the government. And then that withholding tax regulation was a bit controversial because the commencement date or the applicable date of commencement of that withholding tax regulation was 1st of July 2024. Then again, people were getting to be confused that, okay, this regulation was issued, and in the law, if you are issuing a regulation, it should take at least 90 days before implementation. And then the regulation just came out, and then, in fact, the regulation officially came out on the 2nd of July to take effect on the 1st of July. So there were a lot of arguments here and there. Then all of a sudden, it was moved that this withholding tax regulations will take effect from 1st January 2025, which is this year. 1st January 2025. So there were a lot of opinions from my colleagues, tax consultants, and even companies that, okay, what of people that have already started complying? Because the regulation, the circular to commence 1st of January 2025 did not come on time. So there were in between there was some challenge, and of course FRS lost some money because the withholding tax rates were adjusted. For a company to consultant, it was 10% before, and it was adjusted to 5%, and most people adopted, including me. For most of our clients, we adopted it because why not? We're looking at the situation to cut our tax by half from 10% to 5%. Why not? And then we move to 1st January 2025. So then let's look at the updates in the withholding tax regulation that came up. The first one is change of withholding tax applicable rates. Of course, there were adjustments in some withholding tax rates that came in the new withholding tax regulation that took effect from 1st of January 2025 that was issued in July 2024. So the rates changed. There were some shake-off in the rates, which we are going to be seeing subsequently in the slides ahead. And then also, there was a withholding tax double charge for companies without a team. There is a withholding tax double charge for companies without a team. Of course, we are still going to be explaining that in the slides that to come. And then there were conditions for exempting small companies from deduction of withholding taxes. So these were the three major updates in the withholding tax regulation, the three major updates in the withholding tax regulation that was issued in 2024, but then it took effect in this January 2025. But a lot of people did not pay attention to this regulation because we're all boosted up with the new tax law coming up, and this is also incorporated in the new tax law that has been issued and gazetted. So moving forward, let's look at the first one: change in withholding tax applicable rates. Am I making sense? Can I proceed? Please, if you are getting value from this class and you're actually following us, can you just unmute yourself and say value? Let me be sure we're actually
value. More than value, sir.
All right. Thank you so much. Moving on. All right, moving on. Let's look at the withholding tax applicable rates. The withholding tax applicable rates that were issued. As you can see, the transaction, you can see the old rate. These were the old rates. If you look at it, rent, hire of equipment and lease. They did not change this because government is looking at you have the equipment, then you hire it, you take it back. It's just the time of usage. So we should not adjust this withholding tax rate. Let's leave it like that. So they left the withholding tax rate on hire of equipment or lease. It's still there. They have commission, consultancy, management, and professional fees. So if legalized services was withholding 10% before, based on the old rate for companies, and 5% for individuals, now it is 5% for both companies and individuals. The tax rate for companies was cut by half, which is from 10% to 5%. Moving on, supply of goods other than manufacturer. Like if you don't manufacture goods, maybe you are a drop shipper or a middleman, you go and buy from factory and go and sell. Before, withholding tax did not capture that part of it. But now, if you are a company, individual 2%. So you're supposed to pay 2% if you are a supplier, if you're a supplier of goods other than the manufacturer. That you are not the one manufacturing the goods. Then there is supply or rendering of services other than those specifically stated. So if you are supplying a service other than the ones that are stated in the schedule of withholding tax, it's still 2% for company, 2% for individual. Before, it was not applicable. So there was no express rates for it because of the ambiguity in the withholding tax before the regulation was issued. The construction of road, bridges, building, and power plants, it was 2.5 before for company, 5% for individual, but now it's 2% for company, 2% for individual. Then any form of construction and related activities, 5%. Before it was not applicable, but in the new rates, it's 5% both for company and individual. The compensation, the one now, before compensation for loss of employment, it was not applicable before, but now it's a 10%. So let's assume they sacked you outrightly without your let me not say without your knowledge. You lost your employment either by sack or natural disaster or whatever it is, and they pay you a compensation. They're supposed to withhold 10% from that compensation and pay to the government on your behalf. Then director's fees. Director fees was 10% before, now it is 15%. And the last one is brokerage fee. It was not applicable. There was no express rates for brokerage fee. But now company 5%, individual 10%. So these are the basic changes. Of course, not favorable to them because it was not applicable before, but now you have to pay 10%. So let's imagine maybe you lost your employment and then they decide to give you 10 million, or even say, let's say 1 million, you are going to pay 100K to the government for withholding tax. But it was not like that before. So this is just the basic applicable change in rates that is applicable to withholding tax regulation. So moving ahead, let's look at the second point, which has to do with threshold that's the threshold rule, right? The threshold rule. So let's look at what the threshold rule is saying. The threshold rule is saying, the regulation will say small companies are exempt from withholding tax if, can anybody help us? Small companies are exempt from withholding tax if they meet two particular criteria. Anybody can say one, just one. Anybody listening to us, what are the criteria for small companies to be exempt from withholding tax? Anybody? Remember, there's no wrong answer and there's no absolutely correct answer. Let's discuss. Anybody? What do you think withholding tax? Why do you think withholding tax are exempt from small company? What criteria should they meet for them to be exempted from charging withholding tax? Anybody? Okay, nobody coming up.
I think by virtue of the business they run.
Okay, thank you. That is Busola, am I right?
Yes, by virtue of the type of business that they are into.
Okay, by virtue of the type of business they are into. Thank you so much. Any other person, last person before we proceed?
Turnover of less than 2 million per month.
Okay, turnover of less than 2 million per month. Okay. All right, let's see what the slide is saying. The slide is saying, number one, small companies are exempt from withholding tax if the supplier the person supplying to you has a valid tax identification number. So if you are a company and you don't have a tax identification number, they are supposed to withhold no matter the amount. But then I'm going to discuss that further in the next slide. Then two, the transaction is less than or equals to 2 million in a calendar month. Let's say, for instance, Legalified Services and Cruisewise Consulting they went into agreement for a service. So Legalified Service wants to pay Cruisewise Consulting 2 million naira for that service. Legalified Service said that we'll pay 1 million now and we'll pay 500K in installment throughout the month in one week. With some of this, Legalified Services try to deduct 5% withholding tax. We at Consulting will officially write to them, telling them that based on the new withholding tax regulation, you are not supposed to withhold our. Can you mute yourself? Is that when? Please mute yourself. Okay, thank you for that. So we can write to Legalified Service informing them that, sir, you are not supposed to withhold our tax based on the new withholding tax regulation because this transaction is just 2 million. It's not more than 2 million. So if the transaction is 2 million or less, there is no withholding tax deduction. In that calendar month, there is no withholding tax deduction. But in another calendar month, if it's more than 2 million, you have to withhold. So this is the threshold rule for withholding tax. So let's look at what the slide is saying. If either fails, withholding tax applies. So if it doesn't meet these two criteria, withholding tax applies. And you can see there is this little example on the screen. Vendor invoice. Let's take, for instance, 1.5 million. Vendor has a tin. no withholding tax deduction. So the transaction between Legalified Services and Cruisewise Consulting is worth 1.5 million, and then Cruisewise Consulting has 18. So Legalified Service trying to pay Cruisewise Consulting, they would not withhold tax because of this particular rule in line with the Withholding Tax Modification Act of 2024. Example 2, vendor invoices 2.5 million naira in same month, withholding tax applies. Am I making sense? Can we move forward?
Please, I have a question.
Okay. Okay, ask your question.
All this, does it apply to business name also? Because there was a time you said business names are not, when they say companies are not companies. So, but this withholding rule that we are discussing presently, does it cover for business names also? Thank you.
Okay, thank you so much. The withholding, it was not expressly stated if it covers for business name, but based on inference, we can see that there is not way with a business name or an enterprise will not have a team, because once you have an NIN, you are the owner of the business and you have an NIN. Of course, it's already they can use that to file your taxes as your team. They can use that to regenerate your team and file your taxes, because your NIN can represent your team in a case where you don't have a team. Then a business name is tied to the owner, which may not meet this particular criteria of whether the business name has a valid team or not. But in practice, this applies more to limited liability companies. People practicing this are limited liability companies. But then business name, it does not accurately apply, because supplier must have a valid tax identification number. Of course, business name at every point, since it's tied to the owner has an NIN, then of course it is meant that the owner already has a team.
Okay, so can I ask a
expressly, it was not captured in the law, but then in practice, liability companies that practice this more. Please, you have to say something.
Please, can I have a question, please?
Okay.
Hello.
Yeah, go ahead.
Good afternoon. Well done. Please, if I have like, let's say 5 invoices to pay this person, I've been gathering the invoices. Maybe we have 30 days time, and he's been supplying us, and we decided to pay, and it's like 5 invoices. So does it mean that I will have to add all the invoices together? Once it's not up to 2 million, I can't withhold from from any of the transaction.
Yes, once it's not up to 2 million.
Once all the invoices are not up to, let's say 5 invoices together, they are not up to,
within a calendar month.
Yes, let's say within 30 days payment.
Yes.
Okay, thank you.
All right, thank you.
So, hello, sir. I want to have a clarification on this. Is it that now, I'm a company that I'm not within the small. I'm not within the small companies, like big companies now. But I want to pay. I want to pay a vendor with an invoice less than 2 million. Does that mean I don't need to charge withholding tax?
If the vendor is a small company, yes.
Okay, if the vendor is a small company.
Yes.
Okay.
But if it's a big company, you have to charge.
Okay. Thank you, sir.
All right, moving forward, keep your questions till the session. So let's look at the double rate rule for non-team companies for withholding tax. We said there are 3 rules, which is 3 modifications in the withholding tax Act of 2024. The first one is the rate, the second one is the threshold rule, and the third one was the double rate. So the withholding tax update that talks about the double TIN says there is a new directive. If a company does not provide a valid TIN, apply double the prescribed withholding tax rate. For instance, professional fee is supposed to be at 10%, for instance, of withholding tax. But if the person does not have a TIN, the person will suffer a 20% withholding tax deduction. Is this clear? Does this make sense?
Sorry,
So
when you say the person, do you mean a company? I like you to just be mindful.
A company.
Please be mindful of the word.
Okay, the slide is actually saying company. So if a company, you are supposed to charge 10% withholding tax, for instance, and the company does not have a team, the law is mandating you to take 20%. So this is to encourage companies to jump into the tax net, to get a team and jump into the tax net. So if you are carrying a transaction with a company that doesn't have a team, the withholding tax rate should be double. That was one of the updates in the act. Reason why they decided this, to encourage tax registration and compliance. That's one of the reasons why you need to charge double. 2, higher cost of doing business for non-compliant vendors. So by the time non-compliant vendors see that it's higher, they are incurring higher cost to do business, they will jump into the tax net. Does this make sense? Moving forward, I think we don't have so much time again, so I need to be a bit faster. So the practical withholding tax checklist for a business: 1, always collecting evidence from vendors at onboarding. 2, track supplier transaction value per month. 3, apply normal withholding tax rates if both conditions are met. 4, apply double rate if vendor fails to provide valid TIN, or the tax office will receive double penalty from you. That's an addition to that. 5, file and remit promptly using approved templates. So these are the practical withholding tax checklists for your business. So moving on, we're getting close to the finish line. So let's look at personal income tax. Section 2, subsection 1A to C of personal income tax, now mirrored in the Nigerian Tax Act 2025, provides that tax shall be. So we're trying to explain the residency rule around personal income tax, right? This section and this provision provides that tax shall be payable for each year of assessment on the income of any individual who is resident in Nigeria, whether such income is received in Nigeria or elsewhere. So the new Nigerian Tax Act, when it comes to personal income tax, basically is expanding the tax net so that we can get more tax and improve our revenue based on Nigerians working remotely and Nigerians working and digital creators. Digital creators, content creators, influencers, remote workers. Nigeria have expanded our tax net so that we'll capture them in the tax net. So Nigeria have signed a tax treaty with several countries, and then those countries can make available, if your employer, for instance, if you're a remote worker and your employer is in one of those countries that Nigeria have signed a tax treaty with, to get information of your tax record, your pay will be quite easier, because once the government requests, they can send the information to the relevant authorities, either the tax office or the CBN, as the case may be. So Nigeria is operating on residency rule. So for people in Abuja, that's why if you are staying in Maraba or New Caro, or what's that other place, Masaka, or all those sites, and you are working in Abuja, ideally you are supposed to pay your tax to Nasarawa State based on the residency rule, because you reside in Nasarawa. Then for Lagos, people that are staying in Ojudubega, you are staying in Ojudubega, you are working in Lagos. Based on the residency rule, you are supposed to pay your tax to Ogun State government, not Lagos State government, because you reside in Ogun State. So that's just basically what the residency rule is talking about. So the government is trying to use this now and harvest and harness more tax from Nigerians that are based in Nigeria and working remotely from abroad, or digital creators that are in Nigeria. That's why recently, not too long ago, saw a news when the government went after one of those TikTok creators. One of those TikTok creators that pay about 30 million in taxes, right? So that is why Nigeria is brought the tax net, so that we can be able to collect, because Nigeria is moving to digital economy, taxing digital transactions, So that is why they have improved and hammered and made the residency rule more clearer. So once you are in Nigeria, no matter where you are working from, you are supposed to pay tax on your worldwide income. So let's look at the test of residency rule. What makes you know that, okay, at this point, I'm a resident in Nigeria, the residency rule applies to me? The first one is your permanent home, the permanent home test. So permanent home available to them, your permanent home is available to you in Nigeria and you live there regularly. So that is the permanent home test. By that, or you are already, the residency rule already applies to you. The second one is fiscal presence test. You have stayed one night, you are not in Nigeria, or you are in Nigeria, but you don't stay in Nigeria at all, but you are in a year, you have stayed 183 days or more in a 12-month period, then residency rule applies to you. The fourth one is economic to family tie test. You have substantial economic ties such as employment, business, or family in Nigeria. Then the residency rule applies to you. Then the rate, the personal income tax rate, as was discussed by my colleague Joy, applies to you.
Me, I don't snap and tire to Ghana.
Can you mute yourself, please? Then the fourth one is the employee residency test, employer residency test. An employee of the Nigerian government, for instance, posted abroad is deemed to be still resident in Nigeria, no matter the time he spent abroad on that job that transferred him to abroad. Because there are a lot of companies that transfer their staff abroad. I mean, government organizations, NNPC, and most of them, they send their staff to work from abroad, and some of them stay a longer period. Even though you are staying there at that time, you are still a resident of Nigeria, and your tax is still to be remitted in Nigeria. Does this make sense? Moving on to the last part of the slide is the personal income tax table that was already discussed by my colleague Joy. So thank you so much. I think this is the end of my slide, and then thank you so much, Mr. Victor. This is where I will hang my boots, and then if there is any room for question and answer, we'll take it, and then we'll call it a day because time has fast gone.
Oh, thank you. Thank you so much, Mr. Teimba. Thank you very much for your time and effort. I would have loved to also address some issues, actually, from legal perspective, but our time is fast spent, and like we said, we'll be sending 2 gifts to all participants of this meeting today. So if you have not registered previously, there's a link in the comment section. Kindly ensure you register so you get these 2 gifts. So these 2 gifts encapsulate everything that I want to say, how the Nigerian Tax Act particularly, applies to each sector of different of the society. So if you're a business individual, if you're in the human resources department, so it's segment each sector in the society and it applies to each of them. So we broke it down like that. So please, I wanted to ask, if Joy is still with us, if we can take the first 10 questions, so we'll do it very quickly, so we'll not leave any question untouched. Then Teimba will take the next 10 questions. Joy, are you still with us, Joy?
Yes, I'm still here.
Okay, please. Can you kindly go through the question and answer and just run through, answer the first 10 questions, then Teimba will answer the subsequent 10 questions.
Okay, you mean from the chat?
Okay, I can see people, okay, let's do it this way. Why don't you answer the first 10 questions from the chat, then Teimba will answer the first 10 questions from the question and answer, because since people do not observe the difference.
Okay.
Thank you.
All right. So I see a lot of greetings. I'm trying to think through. Okay, so it said the withholding tax range covers from 2% to 10%. Yes, that's correct. It's actually 2%, but like I said, you just need to know the transaction you're dealing with and the appropriate tax rate for that. Yes, it's from 2% and not like 5, like I said. Okay, does this mean that the tenants, okay, for companies that are into sales, the cost of purchasing items for sales falls within the allowable deductions for CIT. That's your cost. If I understand the question correctly, for companies that are into sales, buying and selling, does the cost of purchasing items? Yes. Even in accounting, you need to deduct your costs in order to get your gross profit. So, of course, it's allowable. Okay. Does that mean payments of fees through remitter will no longer be taxed? I don't understand that clearly, but what I believe it's saying is when I was talking about maybe money be paid from your account that I believe it's talking about not all money coming into your account are actually revenue. Yes, if that is what it means, then yes, if payment through remitter, I don't think I understand the question, so let me leave it at that. All right. Do we pay tax every month or annually? Depends on the tax. Value added tax is monthly after you deduct. Withholding tax is monthly. Payee is monthly. Company income tax is annually at the end of the year. So it's personal income tax. Although, like I said, with the new tax act, there is no specific deadline for this one, but you're supposed to still file, do your assessment. Okay. Okay, I see it talks about the threshold for the small companies and everything. Mr. Teimba has covered that and he has actually explained it clearly. Okay. There is provision of laws that stipulate that companies in oil and gas withhold VAT at source and remit. Yes, Mr. Teimba has also touched on that and he has explained it clearly. What should a company do in case where the company files tax in September 2024 and then a letter of additional assessment in 2025? What should we do when a company What should a company do in the case where the company files tax in September 2024? What tax are you filing? Which year tax are you filing? That should be for 2023 because 2024 has not ended, so there's no way we're filing 2024 in September 2024. And they send a letter of additional assessment. What year does the additional assessment covers? I'm not clear on that question. So he continues, say, should there not be a timeline for the Inland Revenue Service to raise additional assessments? So I believe you're talking about 2023 account because that is only the accounting year end that I can see that it's complete. So it depends on when you file. If you're filing 2023 account in 2024, then DEX review would actually review it because there are stages to the way it works, especially with FIRS. There is a DEX review, then there is a tax audit, there's a tax investigation. So the DEX review that's at the tax office level would review and raise additional assessments where necessary. And audits would not cover just 1 year. Audits, although there are special cases, if there are red flags or some transaction that triggers the audit, but normally audits would cover 2 to 3, 4, 5 years on the stretch, meaning they are not just auditing for just 1 year. So whichever way, in as what the letter of additional assessment comes, you respond. Don't be silent. Don't just assume they are here again. They are just wasting my time. Make sure you respond and provide because the additional assessment would always state whatever it is the additional assessment is on. Is it that they say you didn't declare all your turnover, you didn't declare, or they are disallowing some deductions. All you just need to do is to respond and just present your own case and respond to them. Don't be silent about it. You said, what if a registered company has been operational, say 1 or 2 years, just company registration was done? Is filing of tax still compulsory? So when you mean just registered, it means you've not started operational. Okay, it's not been operational. Of course, you have no business. It's only in name. You've not registered the company. It means you don't even have a bank account here. You've not started anything. So it's until you are operational because even when you register with the tax authority, it will state whether you are now operational in business or not. Especially when you're filling the tax update form, it will ask you when commencement date is this company has it started operation. So if it hasn't started operation, of course there is no tax for you to file then. All right. So you said, does it mean LIRs and FIRs can do a tax joint audit? Yes, just like I said, in the new tax act, they could invite each other on board. If they notice some if they notice any red flag, yes, that is like you people and they're not complying with this other one, and maybe it's FIRS that is actually auditing you and they notice something is not right regarding your pay or whatever things that has to do with LIRS or any state inland revenue, they could actually write to them. Now they are the liberty to do that. So it's not a case of it's not your own, just face your own. They can actually do that. All right. I think I've answered more than 10, or should I continue?
Please just continue, please.
Okay, so all right, so you say, can you please, ma, kindly re-explain the aspect of non-paying VAT on capital allowance? Okay, so what I was saying is for VAT, VAT is on goods and services, VATable goods and services. So if capital allowance is on fixed assets that you want to claim, depreciation is not allowed for tax purposes. Capital allowance is allowed in lieu of depreciation, meaning you don't expense your fixed asset as an expense on the face of the financials. You depreciate it gradually. In the case of tax purpose, depreciation will be added back, but will give you capital allowance. So what I'm saying is if you want to claim capital allowance on a fixed asset and it's discovered from 2026 that VAT was not paid on it. You are supposed to pay VAT. You bought the a certain fixed asset for say 1 million. The VAT on it is 75,000. It means you're supposed to pay 71,075,000 to the vendor, and the vendor didn't charge VAT, so you also did not pay. Now the law, as at 2026, would not allow you claim that capital allowance on that VAT because you are not fully compliant with it. So why do you want to claim something that you did not? It's just a way of making sure you pay your VAT also. Okay. Let's see. Still talking about the threshold for the small company. All right. So I think since I'm working from the chat box, I believe I've covered most of the ones. Others are asking for the recording to be sent to their email addresses.
Okay. Thank you very much. Mr. Taimba, can you just take quickly the questions in the Q&A?
Okay, thank you so much. You said I should proceed with some questions.
In the Q&A.
Okay, let me check Q&A. Okay, I've seen. Okay, one question. Will this be recorded, please? That's just the question. It's recorded, of course.
Yeah, it's just one question. Most questions are in the chat box. There is no question.
Share to them. And okay, Mr. Victor already responded. It is recorded and a summary will be made and sent to everybody. I think that's just one question in the Q&A.
Okay.
Yes.
Hello, sorry, there are other questions in the Q&A.
Oh, there are other questions in the Q&A?
Yes, there are 2 questions in the Q&A.
Oh, maybe from your hand. I can only see one here.
Let me copy and paste this in the chat box now. Please just hold on.
Hello, sir.
Yeah, hello.
Yes, please, sir. I mistakenly brought my own chat box also.
I can just ask a few questions here. Someone is saying that you said, just hold on, let me see. You mentioned that a consulting firm cannot be categorized as a small company. So under which category? Yes, based on the Nigerian Tax Act, which is commencing on 1st of January 2026, a consulting company is neither a small nor large company. No matter the amount you make, you are going to pay 30% tax on your profit. So the consulting company neither a small nor big company. A consulting company is just neither a small nor medium company. A consulting company is a large company. Why did the government do so? The government got to understand that professional services doesn't have much of direct costs. Professional services doesn't have much of direct costs. So the government say, okay, then there is no need to grant them exemption since they don't have so much direct costs. Like let's take, for instance, manufacturing companies have to buy raw materials to manufacture. Then people that do trading, you have to go and use cost of, say, buy that particular thing you want to sell. Let's take, for instance, you are selling bottled water. You have to go and buy the bottled water to come and sell. But consultants don't buy anything to sell. Most of the time, professional service has to do with intellectual property. And then the government is saying, oh, since these people are not spending so much on direct costs, let's exempt them from being small or being a small company. So no matter how much you make as a consulting company or a professional service, if you're into professional service, of course, you are meant to pay your taxes, no matter the amount you made. You have to pay your taxes on your profit. There's someone, NHF deduction is compulsory or mandatory. NHF, Nigerian Housing Fund deduction was made mandatory. I think was it 2023 or 2024? NHF deduction was made mandatory for payroll purposes. It's not compulsory. Then moving forward. To also clarify that tax computation is done after NHF, NIC, and pension deducted. When I talk about tax computation, I'm talking about personal income tax. If it's personal income tax, yes, you can. The take home, which the tax you have to pay, after you have deducted your pension, deducted the deduction, you have taken off the deductions on pension, NHF, NHIS. But then you should know that when a tax audit comes up, they will need you to present evidence of payment or remittance to those statutory bodies. So it's not just about deducting or using it to reduce tax. It's all about deducting and remitting. Because if tax audit comes up, they will request that you provide evidence of payment and filing. Moving on, you said housing is tax exempt from VAT, but
Why
you said housing is tax exempt for VAT, but that commercial rent is taxable. How do we reconcile this with personal income tax on land? Vis-a-vis withholding tax, which the tenant is supposedly meant to withhold as the landlord income is taxable? Well, I don't understand this question clearly, but I understand the withholding tax part. Everybody, you are supposed to withhold, if you are paying money to your landlord, you are supposed to 10% on it. But frankly speaking, the law has said it. But in Nigeria, you want to withhold from landlord will say, or the land. That's why most landlords that understand this provision will tell you that their rent, what they are charging you is net. So when they say your rent is net, they mean that you should go and pay the withholding tax to the government. What they are receiving is net. And then property, when it comes to property development, property purchase, sale of property and development on land is not vatable. But it's quite unfortunate that most FIRS staff working in FIRS don't understand this. Then when they send real estate companies that are into property development a letter, they also include VAT in it. And most real estate companies end up paying without knowing how. Because, of course, there is no provision in the old tax law that is going to end on the 31st of December, this 2025. There's actually no provision that expressly states that property is excluded from VAT. But then there are a lot of decided cases that have ruled in favor that VAT should not be chargeable on property. So that is what we use currently when it comes to tax consultancy. Moving on, for NGOs who withhold taxes on professional service on consultant, please confirm the reduction to withhold should be 5% or 10%. It was 10% before, but based on the new Withholding Tax Modification Act of 2024, it is 5%. Moving on. Sir, for the withholding VAT, if a company obligated to charge withholding VAT and the vendor also charges the company for VAT, does it mean that the company should withhold VAT from the vendor and still pay the VAT? The company that is responsible for withholding VAT will not pay you VAT. They will only withhold VAT from you and pay you the net. They will not, if you charge them VAT, they will not pay the VAT you charge them. They will just withhold the VAT on the VAT element, pay to the government and pay the net to you. They will not pay VAT to you because the government will pay VAT directly to the FIRS. Moving on. For a business, bracket fish farm, that started operations and registered in 2024, but stopped business in 2025 and also has not commenced filing at all, is this business going to face penalty? If you have commenced business, the same way you commence business, you need to go back and tell the government that, look, this business no work, I want to stop. But if you don't say anything, you remain quiet. Once you have commenced business, your penalty will start accumulating. We keep accumulating. But then you may be lucky, you only pay penalties because since you have not done business, there will be no interest on the tax you have not paid. But then the same way you went to the government, the FIRS would say that, okay, to do tax promo, how to commence business, you need to write to, there's a cessation procedure for businesses. Moving on, NHF is optional for private company employees. Yes, sir. NHF is now optional for private company employees. NHF is now optional for private, I think. Yes, NHF is now optional for private companies. Question: is self-charge VAT applicable to buying goods, e.g., stationaries in any enterprise or choice without the enterprise being its supplier? If the enterprise, if the company is self-charge VAT applicable to buying goods, stationery in any enterprise or choice being its supplier? It depends. If the enterprise or the company to say, if the company is a small company, you still have to, it's applicable. But then in a case where the company is an unregistered company, a layman business, of course the supplier, the person that is offering this, the person you are offering the service to is supposed to self-charge that VAT and file. But there are some cases where the tax office may just permit it. It's just a normal shop in the market. They can just permit, but then it's based on the law, it's applicable. Can you explain effective tax rate? Can you explain effective tax and minimum tax? Well, minimum tax is basically the list of the taxes the company is supposed to pay in a case where the company made loss and is not able to file taxes. So minimum tax is a list tax. It's 0.5% now on turnover. Moving on, is there any restrictions on number of years you can carry over on the capital allowance in NTA? I've not paid attention to that particular provision. I need to revisit the NTA. Does any type of tax apply to financial support or gift or such other inflows into personal accounts? Well, this is tricky. What kind of support? What kind of gift? Because the tax law is expressly said tax is applicable on worldwide income. But in Nigeria, we only enforce on employees. But if the government starts employing on income from all sources, it's going to be quite a hassle because a lot of challenges come up. So talking about gifts and support and gifts, what kind of support, what kind of gifts? If you are a student and your parents are giving you money to go to school, it's not applicable. But if it's benefit in kind, maybe you did something to someone and someone decides to just give you money. Maybe you help someone carry a bag, or you help someone do something and someone decides to give you like 100K, 200K as, okay, that can be classified as income from all sources. But then in Nigeria, the government focuses more on employees. They don't try to enforce other taxes that has to do with income from all sources, except it is, of course, a huge money. Please, for any organization that has various depots within, for an organization that has various depots within the country, how do we remit our taxes seamlessly without drawing checks? When you're talking about taxes, is it company income tax or personal income tax? But then that is actually an issue of internal policies. You can adjust in your internal policy. You can actually, there are some companies that you can actually have a token, many banks give tokens. You can actually have a token and approval levels. One person upload, and then another person approves, and then finally the organ finally approves. It can work for you like that, because in this age and time, it's possible to be able to access, do a lot of transactions without worrying about drawing checks. You can use token and do approval levels, access approval levels for your payments. That should work going forward. But withholding tax on rent, what if the landlord does not have TIN? How do one remit withholding tax on rent? Withholding tax on rent, you pay to the relevant tax authority. You know, there is payment and there is filing. Payment is to pay to the FCT. If you are in Abuja, FCTRS. If you are in Lagos, LIRS, and all other states as the case may be. So you first pay the money, then present the person's TIN and details for it to be filed to that person's name. So if you pay, it's paid through remitter. So if you pay through remitter, you are a step forward. There's no penalty or anything that can accrue to you. Then it will be left for you anytime the landlord, then you pull up for the landlord to get a TIN, then you go and give the TIN, and the money is allocated to that particular TIN. That's how it works. So you can pay and then before filing. So if you have withhold the rent and the landlord agree with you, which I think 99% of landlord no go agree, sincerely, we're in Nigeria. Except it's a corporate landlord, maybe a situation where it's a big property or you can pay, then receive the thing and go and file. You can pay remit.
Mr. Taimba, I think we should just round up on the questions. We can't take all the questions, due to time.
I just have one more question here. With NTA, does it mean the CRA relief allowance is no longer applicable? Yes, the Nigerian tax act has eliminated the consolidated relief allowance, which is CRA, and now introduced the rent relief. Either 500,000 or 20% of your rent. If the 20% of your rent is higher than 500,000, then 500,000 will be applicable as your relief. But then there have to be evidence of payment of the rent. So I think that's the last question. The last person here is saying, thank you for the presentation. You two presented beautifully well. Thank you so much, Mr. Jakeman. What is the next step to take after this webinar? How can I get assistance for this webinar as a small business owner? How can I keep my records and consult a tax consultant? You can reach out to Legalify Services. Of course, this is their platform, so you can reach out to them. Of course, I'm also a tax consultant. Legalify Services, if these are not services they offer, you can reach out to them. They can refer to us. So thank you so much for this wonderful session, and it was very exciting taking time out with you. And I believe I've also learned. I learned from my colleague Joy, and then also from the little words chipping into the conversation from Mr. Victor. Thank you so much, and I'll take a step back for Mr. Victor to proceed to round us up.
Okay, thank you. Thank you very much, Mr. Taimba and Joy. Thank you very much. And we appreciate, what you've done so far. I believe there will be more questions from individuals. If you have any other question, you can send us a mail. And if you've previously registered and you've gotten emails from us, please do not register again. If you're here and you have not registered, please register. And why do I say you should register? I say you should register because there's a particular presentation I'm supposed to make, a broad presentation on NTA, that's the Tax Act itself. And I'm supposed to break it down sector by sector, how it affects different sectors in the Nigerian economy broadly and generally. But, due to time, I can't do that. So that particular part will be encapsulated in the 2 gifts we'll be giving out to you. So they are very detailed, easy to understand. You can read it and comprehend it. And if you have any question, any reach out at all, our mail is out there, and always reach out to us. So thank you very much.
Excuse me, very quickly.
Okay.
I wanted to confirm. So I had registered for this webinar yesterday, but I didn't get any email. So do I have to register again?
Okay. To be on the safe side, just register. So far you did not get a mail from us.
Yes, I
for
didn't.
this particular. Did you get a mail from us for this particular event?
No, I didn't. I had to reach out to Mr. Bat to help share the link.
So if you did not get a mail from us for this event, please register again. Please. It's very important.
Right.
Thank you.
Thank
The registration link is in the comment section. Please just click it and register, or you can check any of our social media accounts, Legalify Attorneys. You'll see the what's the name, the link to register immediately. So we'll forward you a summary of everything we have done here today, and we'll forward you the 2 gifts we promised also. So thank you very much for your time and effort. Thank you. So we can successfully call it a day today, isn't it?
Sir,
yes, please. Thank you very much.
Okay, thank you. Thank you very much.
Thank you so much.
Please, I will still stay a while for those that want to click the link in the comment section to register. So I'll still stay on for a while so that you can do that.
Hello, sir.
Yes, I'm with you.
Hello, sir. Please, I want to seek clarification. I want to know if there is a group that we can connect to share more experience about the tax law and other benefits associated with professionals.
I didn't get that clearly. Can you say that again, please?
I said I want to be sure if there is WhatsApp group.
Okay, now this is it. There's this particular email we used to message you, through which we sent you a mail.
Yes.
So if there's any question you have, any reach out, any clarification, just shoot us a mail and we'll pick it up from there.
Okay, thank you very much, sir.
Thank you.
Hello, good afternoon. Hello, sir. Hello.
Hello, please. If you have any clarification for that question, just send us a mail, please.
I wanted to say that I've registered and registered the phone. I'm not getting
You will get, so far you've registered, you'll get a mail, I can assure you. Okay?